All right.
Ready to go?
Good to go.
Good deal. Well, good afternoon and welcome to the Venture Center's Lunch and Learn Fintech Entrepreneurs on the Rise. I'm Wayne Miller, Executive Director of the Venture Center, and thank you all for being with us today. Typically, this has been an event that, again, post or pre-COVID, we've done at the Clinton Center, which has been extraordinary with a great crowd. Today, we have about 40 people joining us on the call, as well as some pretty courageous folks who are doing some remarkable things and changing the world as it relates to fintech, who are specifically participating in our FIS Fintech Accelerator right now. We've got Lindsay, Mike, Sohaib, and also Yamini, who we're going to hear from in just a minute. But I also like to make sure to start off with a thanks to those who have been supportive here at the Venture Center and help as sponsors to our program. Of course, FIS, who is supporting the current FIS Accelerator, along with the state of Arkansas, the Little Rock Regional Chamber, Frost Accounting, Simmons Bank, and Wright, Lindsay, and Jennings, who are all great partners to us and help support the Venture Center and its mission to help educate, to collaborate more effectively, and to help accelerate companies. Given that as a start, what we're trying to convey today and want to share with each and every one of you is the journey of each of these entrepreneurs. And what I'd like to do to start with is just ask each of them really quickly, and I will call you out, to just talk about who you are, where you are in the world, and maybe a little bit about your background. So if I could ask each of you just to give a minute or two on that. Lindsay, let's go ahead and start with you, if you would, please.
Hi, everyone. I'm Lindsay Holden. I'm the CEO of Long Game, and we're located in San Francisco. I'm located in San Francisco, and we make a gamified app that sits on top of your bank account and educates you and gives you rewards for saving. And it's a really fun project.
How long have you been at this?
I've been doing it over 5 years now. So our company has been around a while and gone through a lot of ups and downs, and I'm excited to be a part of this and share this with you today.
Awesome. Thanks so much. Sohaib, why don't you tell us about you, where you're from, and a little bit about your company?
So my name is Sohaib. I'm the co-founder CEO of Railz, and we're building the middleware for banks to access financial data on small, medium enterprises for various use cases, all the way from loan origination to underwriting, portfolio monitoring, anything that you can do with the data. I think the sky's the limit here. I entered into entrepreneurship from the field of medicine, and this is my third company now. I have 2 exits in the past, and very excited to build a company in the middle of a pandemic. Was a big challenge, but looking forward to do a whole lot to come.
Good deal, thanks. And where are you calling us from today? Where are you online from?
I'm from the beautiful Toronto, up in the north.
Good deal. So we got the West Coast and the North covered so far. Yamini, how about you?
Hi, I'm Yamini. I'm a co-founder and CEO of Vymo. Vymo is what we call a sales acceleration platform. It's meant to improve producer effectiveness. Typically, we sit on top of a CRM or can be your lightweight Salesforce automation solution. The intent is that this is designed to be a solution that actually is built around the reps to enable them to take actions like engagement actions against their customers and prospects that improves their outcomes, right? So Vymo captures sales activities, learns what the top performers are doing, and translates that into nudges and next best actions that an average seller mimic winning behaviors. About 200,000 sellers use Vymo. So the company is about 7+ years old. We are new to the US though. We started off in Asia, built a lot of momentum, and now work with some marquee customers in the US. Like Sohaib's comment, it was interesting trying to break. We just built a US team and then the pandemic hit, which was super interesting on decisions founders have to make at that point in time. But we stuck with it, and that's led to today customers like Berkshire Hathaway, etc. And it's amazing. So looking forward to this conversation.
Good deal. And tell us where you're calling from today.
So I'm logging in from Bangalore today.
So good deal. All the way from India. Outstanding. Good deal. Mike, last but not least for sure.
I'm pretty much least. My name is Mike Montgomery. I'm the founder, CEO of BankLabs. Calling in from Little Rock, Arkansas. I'm just on the other side of Little Rock from where Wayne is. I started BankLabs about 10 years ago. My entire career, I worked for what is today FIS. I started as a coder, ran data centers, and moved on up to where I actually ran all of sales and marketing before I retired. What BankLabs is we're focused on community banking, which we define as a way of doing business, not about a size. People, when they hear community bank, think it's a tiny bank, but we have a couple of plus $50 billion banks as clients. So we think it's a way of business, not a matter of size. We focus, we're a multi-product company, which is a little rare in the fintech space these days. We always have a tendency to go against the grain, but we have 4 products that actually we run, and the one that's being introduced into the market through the accelerator is Participate. Participate is a way to help banks manage and work with participation loans, which is always a very manual, inefficient process inside banking.
Good deal. Well, let me stick with you. You mentioned a pretty stellar career with Systematics and ultimately what became FIS, et cetera. And Mike, there was obviously a point in time where you got up one morning and said, hey, I'm going to go build something, or I'm going to start this business, and I'm going to take that journey as an entrepreneur. Share with us a little bit about that journey and what got you up one day and said, you know what, I'm going to quit my day job and start using my credit cards to make payroll and all the things that we know are crazy and happen. Love to hear that from you to start with, if you wouldn't mind.
I ran out of credit card balance available during the start. So yeah, really what happened was the financial crisis hit in 2008, 2009. I was an investor in a bank on the bank board, and I watched the bank start to go through what all the other banks in the country were going through, which was picking up an awful lot of foreclosed properties. And as I'd wander around the bank, I noticed that more and more offices were getting filled with those Redwell expandable files on people's floors, which were the loan files and all the documentation for the real estate they were picking up. And I literally just had a thought that was, I think I can do this better than this manual process, and then trying to keep up with spreadsheets. So we wrote a pretty simple little package that helped banks manage and help banks sell that. Coming out of that, we jumped on the opposite end of that spectrum and said, we found another spreadsheet-based process in construction lending. Very highly inefficient, a lot of friction in the process product of banking. And so again, it was just like, golly, I know we can do this better. So we wrote another mobile-based web app that banks could use for construction lending. And we just happened to hit the space at the right time. And, we're now one of the top 2. Kind of depends on which one of us you ask, which is number 1, which is number 2, but in the space. And we've got, 150 banks or so around the country that are using that product. And I think that's about to go to 400 or 500 banks. We've got construction projects we're managing in, I think the only state we don't have any projects in is in Vermont. We've got projects that we manage in Canada, probably 4 or 5 other provinces. So it's been a pretty successful product, and we're hoping to have the same success with Participate. It's just going after manual, spreadsheet-based, high-friction processes.
Good deal. We'll come back and talk a little bit about how did you know you had a business. And let me move to Yamini. Yamini, same question for you. CRM has been around for a long time, and having part of my career as a sales guy, I always perceived it more as a task than a tool. And I think when you can understand the value of it, really how it can help you close business and communicate more effectively with your clients and so forth, awful lot of people in that space. And you've really come along with a solution that is helping to really streamline the ineffective aspects of CRM. Tell us a little bit about your journey and what got you to think about this one day and say, you know what, this is broken, I want to fix it. Or like Mike, there was friction there, et cetera. I'd love to hear your story.
Yeah, so prior to this, I was a consultant with McKinsey for about 5.5 years, half of that in Asia, half of that I was based out of Philadelphia, serving some of the largest brokers, insurers, banks, lenders on driving their marketing and sales org outcomes. Sales productivity was a top of mind topic. This was in the 2012-13 timeframe when also cloud CRM was the thing that many of these companies had invested in. The typical assumption was that let's bring in McKinsey because now we have so much data, right? And the CRM was a good repository of customer data to the extent that you have visibility on, but otherwise it was not where the salespeople were living. I remember distinctly, I was on stage with the CEO rolling out certain capabilities of the CRM to pushing to drive up adoption because we had literally no information on what salespeople were actually doing on the ground. What did they plan? When did they engage? How many days before renewal did you get in touch with your customer? How many touch points did you have after your first sale with a commercial account? So on and so forth, right? So literally there was nothing we could draw as a pattern on what the best performers were doing that the others needed to do. So I remember relaunching the CRM under a very highly internally marketed initiative. And we were on stage and we said, here is what we want you to do. We want you to capture this kind of information. And one of the best salespeople there, who are usually the ones who speak up in these sessions, said, what's in it for me? And I would love to double my numbers, but how are you helping me do that? And I remember that the CRM team was actually prepared for this question, and they had a slide which said, ask not what the country can do for you, so on, right? So
Right.
and the point is, no sales guy cares, right? They only care about what they're going to make at the end of the month. So, and if people were throwing money at consultants to solve this problem, and they like tried everything they could with the CRM, it definitely showed that this is a meaningful TAM. I wasn't set out to build a company that's like venture funded multiple times. It was just that this is something you need to solve as a product, not as a consultant, right? And being a computer science engineer, it just wanted to do it at that point in time. So that's how the story started.
So you were working for McKinsey at the time when you took this leap?
Yeah.
Good deal. So that working for McKinsey is a big deal, right? And obviously working as a consultant and so forth. So did you sort of ramp this up as you were working, or did you make a hard stop one day and say, I'm going to go do this? How did that happen?
So different people make different choices at that point. For me, McKinsey was a pit stop. I was very aware of that. I am a computer science engineer by background. The only reason I moved towards the business side of it was because I cared a lot about what my code was trying to solve and wanted to control that. But otherwise, my philosophy at that point, I was figuring out what to do. And at that point, I took a leave of absence. But 2 months in, I knew this was what I wanted to do. And Venkat and I met up. He's my co-founder. We were batchmates in undergrad. So we spoke about it. He was excited about it. At that point in time, McKinsey so I put in my papers and they said, listen, you have at least 4 months of leave of absence and you can extend it to like however long you want. Why don't you see where this goes? And if you get funded, you could move. And my point was, safety net just doesn't help, right? So in this kind of a situation, so the thought was, let's see where it goes. If it doesn't work, we'll figure it out again. So I guess you have to be kind of a really optimistic fool to do something, to start up once, right? The first time maybe, and then you get wiser and probably do it multiple times. But yeah, but that was so I did not want the safety net. I quit to start this.
Good for you. Courageous move for sure. Lindsay, how about you in long game? You've been at this a little bit.
How do we get started? So yeah, I the idea for long game was really inspiring to me. But before that, I had worked on a company with a couple of friends that was in the domain auction space. It turned out we created this marketplace for top level domains. If anyone's familiar with those, it's a string, alternatives to .com. Very unique asset. And we've been working on that and had just a lot of success with it. It was super fun to create a marketplace. We saw all kinds of crazy dynamics that were happening with our customers, how they were bidding for these assets. And I just had a great time. I really enjoyed kind of the aspect of like having an auction, all these like cool behavioral economics things that were happening. building a business, and then I came across the idea for prize-linked savings. Prize-linked savings is a foundational idea of Long Game. What the concept is, it's a behavioral economics mechanism that when you save money, instead of getting a direct interest rate, or in addition to a direct interest rate, you get access to win a large prize. And this has been something that was commercialized multiple times before, but most famously in the UK with something called premium bonds. And premium bonds, you basically get £1 million. You buy a bond, a government bond, and you get entered to win £1 million. And they do a drawing every month, and it's super famous. They have like £50 billion saved in these government bonds. And I, hearing that idea, was like, we can use tech to make this accessible to everyone in the US. And it was just like something that I deeply wanted to work on. And yeah, so that's the story of it. I mean, starting out a company is, it takes a little bit of a crazy idea to get you out there. Am I frozen? Let me see if I can fix that.
Yeah, you are. It's all right. We can hear you though, which is good. So let's see if you'll come back here. Well, let me go ahead and move on to Sohaib at this point and ask him the same question. Lindsay, thank you, and I'll certainly come back to you. So Sohaib, Railz, you're obviously, I think all of you are somewhat what we would refer to as serial entrepreneurs, like you've done this before, done this with someone before. Yeah, you mentioned earlier as we started off today that this is your third company. And so what got you interested to set up Railz and get this company going?
Yeah, so Railz, the idea which came across when I was working on provisioning APIs for QuickBooks. Provisioning is just giving access to different applications who want to interact with QuickBooks accounting system. And a lot of times these companies were coming back to me and saying, hey, why don't you fix APIs for QuickBooks rather than giving them access to provisioning? And the answer was QuickBooks has one of the best programming interface, which you can use to pull data out of QuickBooks. And QuickBooks is primary accounting software for a lot of SMEs in North America. And a lot of their financial data resides within these accounting systems. Bank data, vendors, payroll, HR, e-commerce, everything hits the accounting system. So this is a very rich set of data set that banks or financial institutions or even product companies can have access to and really see how a business functions. Who do they buy from? Who are they selling to? How can we underwrite them? How do we monitor them when we give them the loan? And a lot of institutions were trying to get access to this data, but the problem was created by QuickBooks and these accounting systems is there are a little over 30 million businesses in North America, which really means that there are 30 million different data sets that can come out of these systems. And it's not just debits and credits, it's a very intricate data set that you have to work with. And companies like QuickBooks have only two categories, accounts and sub-accounts. So a truck, for example, which is owned by a delivery service will always be categorized as asset. You will never know if it's a current asset or not, So that subgrouping of everything into one space, one size fits all, is across the board for every accounting system, which makes it very hard for banks and companies to work with this data and make meaning out of it. So I started to look in the space who was doing normalization of this data, and I came across my founder, Derek, who was building a company called Coral, which was a top-line revenue financing company. And he built a system which was onboarding a business and making a decision in real time and giving them a loan. And when we started to talk, it became apparent that a lot more companies were building not only lending applications, but ACH payment applications, cash flow forecasting for small, medium enterprises, and the list goes on. Can be built on top of this data set. So why restrict ourselves to just building one use case when the whole world can use our technology and can make the lives of a lot of SMEs easier, better across the board? So that's what triggered me to leave my last company and start working with Derek to build Railz.
Good deal. How did you, I'm going to stick with you for a minute here. You know, as you went through that decision process, there's obviously a point in time where you got to do this and make money at it. You know, I say it often, which is nobody buys what you're selling. You don't have a business, right? So you are producing revenue today. You do have a business. What was the inflection point for you? When did you know that you had a business? When did you know that this was successful? And how did you make that determination? Was it through customer discovery? Obviously through your own knowledge, et cetera. How did you know you had a business?
So my North Star is always go after the problem and where the problem resides and how big that problem is. So, and that demands talking every day with customers who are having this problem day in and day out. And something I tell my team every day, if something passes a toothbrush test, that means it's a problem, which means can people use it twice a day, every day, or use it repeatedly? And the answer is yes, you need to work on this problem because a lot more people are having it. So we went back to people who already had integrations with QuickBooks and who are pulling this data, and we just sent our normalized version of the data and asked, is this something you will use? And the answer back was, how are you guys doing this? Are you manually doing it? Are you guys accountants? Do you have financial background? And I was like, no, we build algorithms to clean and parse it. And that's what's triggered, because we talked to a lot of fintech companies who are trying to build these integrations. And so across the board that everyone was doing it and we can make their lives easier. So that was an inflection point to jump into the problem. And the other inflection point was my founder. You know, I wouldn't have built it without him. He's a top 5 mathematical minds here in Canada. He's been in the space for a while. So, you know, working with him was really a big deal, you know, and I'm truly fortunate to work with Derek on this. So if it wasn't for my founder and the problem, I wouldn't have probably started Railz.
Well, that's great. And you guys have bootstrapped initially, is that correct?
Yeah, we were bootstrapped when we started. So all founders put in money into the company early days. We believed in it, but we registered our company in June, but we were talking about it since January of that year. And in September, we raised our first round of funding.
Well, congrats. That's awesome. I have never heard the toothbrush test before. Thank you for sharing that with us today. That's awesome. I love that. Lindsay, how about you? Oh, I think you're on mute.
The question is just, how did we know this was a business?
Yeah, I mean, you know, you obviously talked about premium bonds in the UK, which we're familiar with, et cetera, and how that really changes the way people think about saving money, et cetera. We know statistically that most Americans, 70%, I think it's 73% have less than $400 in the bank. So saving is important. Everybody talked about how this last year with COVID, everybody saved a lot of money. I would challenge you that people didn't spend money. And I think there's a difference there, but that's just an opinion. So I'll stop there. But the point is that, you know, obviously you saw the success of what was occurring in the UK, which I thought, it sounds like it was a catalyst to some of your decision. I think about 60 or 70% of the states in the United States now actually respect the idea of price-linked savings, although you're doing something a little different than that today. But how did you know you had a business? I mean, this is a great idea. It's exciting. It's been successful someplace else. A lot of indicators that said, yep, this is something we ought to do. But how'd you know you had a business there?
Yeah, so I'll say, you know, the idea is for price-linked savings and making this into an app experience is a little bit of a crazy one. Like the custom kind of user experience that most people are accustomed to when they're dealing with their finances is not a game. There's a lot of emphasis put on brand trust and being very secure when you're thinking about like building, you know, new financial tools for people. So when we first started, we kind of thought that was the way we would have to go, and, you know, really making things just very, you know, kind of bank-like, but giving people this incentive. And then as we started to develop the product, we started to see like actually if we make this into a high production game that's truly like trying to change this emotional experience for customers, trying to make this into something they want to engage with, something that's fun, we see better results. And so Long Game started as, you know, kind of like just like a really exciting mission-driven idea to help people save more. And I don't know that we didn't have, I would say like, now looking back, like a really good grasp on the fundamental like business that was going to be behind that. Like we were monetizing on float. it's a hard business, as banks know. And, you know, we started out going that way, but we found very quickly, you know, we're extremely good at a couple things, right? Games create new interactions with consumers. So we are very good at acquiring customers, very good at engaging those customers, growing balances, helping people to, like, the average long game customer comes back to the app every day. And so putting games on top of this thing that actually has a pretty negative connotation for all the reasons that you just stated, for people, and then putting a game on top of it and making it something that people engage with was actually like a really tough challenge. Like, it's actually a really hard thing to do, to change people's behaviors when it comes to finances. And so Long Game worked on that a lot, and we've built a really special product. And so our initial revenue path of monetizing on float wasn't going to work for the business. And even though we thought, you know, we proved that there's like definitely interest, consumer interest. It passed the toothbrush test. Because really, like, what we're seeing is they do engage with it twice a day. So then we had to really think about, okay, how do we make this into a sustainable business? How do we leverage the things that we're really good at and make it into something that's super valuable in the market as well, not just to the consumer. And so we started last year actually partnering with banks. We provide Long Game on top of bank accounts. We help banks to acquire new customers. We help them to engage with their customers in a new way, to put their products and their brand right in front of a customer every day. And it's a really fun, like, gamified app that really relates to millennials and Gen Z. It's a new digital strategy that banks are using. And so we started exploring that, and then we started adding partners. So Long Game works with all of the major fintechs pretty much today. And so that's kind of, I guess, our path to revenue. It wasn't a straight line. I think, you know, when you start a business, like all of you guys know this, like, you start out with assumptions, and then you're kind of testing those assumptions and you're tweaking it, and you don't know the whole path yet. But a lot of, I think, what people admire about entrepreneurs and why we're on this panel today is that, like, there's a certain level of kind of like confidence and grit it takes to continue to, like, kind of grind on that and to figure out what the best path forward is and create something that is innovative and new and valuable to people. So yeah. Thanks.
Awesome. Great. I want to unpack one part of this, which you mentioned, which was the issue of the mission, right? You know, and we've certainly seen this in our work, which is, you know, the mission's awesome, but at the end of the day, it's got to be a business, right? So you made a fairly significant pivot, made a course correction, obviously, which, one, you have to be wise enough, right, and intelligent enough to recognize that you've got to do that. But what was the cause for that for you? I mean, obviously, it was very mission driven initially from what you talked about, but then you recognized that the flow of cash or the way the business was going to be able to sustain itself, and I think it was, you know, sustenance that you talked about there in particular, was how'd you get to that moment? Because I think that's important for people to understand.
Yeah, I mean, it's really like that. I think it's an interesting question, because to try to, like, make it more relatable to other people, you know, of course, there's like a certain path we went down. You know, you're told it's hard as an entrepreneur, and you're gonna have problems that you have to figure out. And I think part of, like, the finesse and, like, what you learn as you do it for time is really, like, there's, like, when do you, like, bang your head against the wall longer on a problem, and when do you, like, change course? And, like, you know, I think the hardest ones are when you're, like, almost there, like, it's, like, super close, like, we can make this work, and so, like, let's work on this, like, a little bit longer, when maybe this isn't the path that you should be going down. And I think that kind of represents a little bit of what kind of we went through as a business, because we were like the business model we had was almost viable. And so it was a really hard decision to change our revenue model. Like, it didn't change the mission of the company, right? The product itself, the kind of special thing that we built, is the same thing. We just changed the revenue model, which is really hard. I'm sure you guys can all relate. Like, it's like, you know, something that making a big change like that is difficult. But certainly like, I think a harder change would be changing the mission and changing like what you're here to do and what the company is like built around. And that's something that we haven't had to do.
Awesome. Great stuff. Thanks for sharing that. I think we use the term pivot probably too often and somewhat inappropriately, when oftentimes it's just a matter of course correction, right? So pivot to me suggests really a change in business, but that's great. And I'm delighted to understand further that the mission, in fact, has truly remained the same, which is really trying to make a difference in the world, which I think you all are doing a hell of a job at. Mike, let me shift to you a little bit now and talk a little bit about, you obviously saw a need, there was friction there, et cetera, and you decided to build this and turn it into a business. How did you know you had a business?
Yeah, there were several things that kind of hit me along the road. I always kind of thought it was a good idea. I always felt pretty committed to, how can I really help these banks survive and thrive? Because community banking is struggling, and I knew that. Every time I walk in, I'm the oldest banker in the room, which is a little bit sad, but literally I was born into a banking family. So I think the first good feedback I got was when we took our first product into a bank. This was in 2000, right? The first in 2011. It was a reasonably good sized bank. We knew they had quite a bit of problems on their balance sheet. We walked in with an iPad, and no one in the bank had ever seen an iPad do something. And then when we fired it up, and we had to fire it up on a hotspot off one of our phones, because back even as recently as 2011, banks didn't allow Wi-Fi networks on their premises. I got pretty confident that this is going to change the game a little bit for these guys. And then I got really encouraged when I ran across several bankers taking out when we took our Construct product out, and they said, this is not anything we need. We handle this with spreadsheets. So I had, I think, about 8 or 10 banks send me their spreadsheets to make sure we were kind of on the right path. The beautiful thing was they sent me the spreadsheets, and I was able to go in every spreadsheet that I went through. I found at least one error. I thought, this is going to be easy. These guys don't know their spreadsheet is bad. The regulators were starting to raise the alarm on spreadsheets. We took one of the bankers out that actually was doing some construction lending, and it was the first test, actual test of our Construct product. Again, we took an iPad and we took a mobile phone, and we drove out to the place where they were building the house. It popped up on the map, popped up all the data on the loan. The guy did the inspection. The guy looked at it and the draw was already calculated. He hit submit, sent it back to the bank CFO. And as he's walking back, basically his comments were, holy crap, do you know how long it normally takes us to get this done? And from that, he called 3 or 4 other bankers and said, you guys got to do this. I thought, that's kind of a good sign. And then I think the last sign that I got really was, I remember not long into starting to sell Construct, I walked into the office one day and walked out to the mailbox and grabbed literally a handful of checks in envelopes. And it's like, oh my God, these dumbasses are still paying everything by check. I could make a lot of money in this space and help a lot of people. So literally, it didn't take much prodding after that. It was pretty much an open market.
So obviously proven the value, and nothing like getting a handful of checks, right?
Well, it's pretty stupid, but it is pretty satisfying.
That's it for sure. That's it. Yamini, how about you? How'd you know you had a business? You obviously, once again, saw an incredible need. You took the risk, you jumped off, and how did you begin to know that you could actually monetize your idea?
So I remember the first customer that we signed up for a pilot, they had typical marketing lead conversion rates in insurance is 2 to 3%. They had that. And then they were at a point in business where they had to decide to shut down D2C as an approach completely if they couldn't improve the conversion, because what they were spending per lead was just not good enough, right? Do not sustain this. So they had a very big problem. They had a very important decision to make, and they needed tools to be able to answer if is this a productivity leakage or this just won't work. So they took the bet. I remember we were doing user group discussions to design the perfect solution. Perfect solution not only will improve your lead conversion, but also will be used and liked by your reps. So we can actually understand their behaviors, right? And in the user discussions, there'll be one or two folks excited about something tech that they can, like just the whole tech aspect of how they do their daily work. But 8 out of 10 would be skeptics. They would assume this is like, any CRM related story has typically been management driven and focused on trying to get information from salespeople. So they were right to be skeptics, right? And wondered if this was a different way of doing Big Brother. So that was the challenge. And then we went with it. And in 6 weeks, we had a solution ready to go live for POC on. And I remember overnight conversion rates improved 25%. And within a week or two, we had 90% plus daily active usage. Right? Because the prompts we were at that point in time, nudges was not the language, because what we were suggesting to the salespeople was starting to look meaningful for them, right? And therefore that metric, that was the first turning point for us, that, well, we were not yapping, this can actually be solved. It's possible. Now we have to figure out scale, like all of that stuff, right? But since then till date, one of the number one metrics we track at Vymo is daily active usage, because we know that has to be 80% plus. And if it doesn't happen, because say like CRM's daily active usage is less than 10%, right? So the moment that as long as that stays up, we know that we are doing the right thing for the rep. Right. And so that was the first moment. And then I think 7-8 months, we were bootstrapped too at that point in time. It was all on the back of customer revenue. So we were very cautious on hiring and so on. And then suddenly in a 3-month period, we closed the largest bank in the country, the largest insurer in the country, right? And like 2 more, right? And suddenly we were that's when we started understanding, it's not one insurer, it's like 3 insurers signing up. So this is repeatable. So that was the second moment. And the third moment were when we were like pitching against a CRM player who had probably 100,000 employees at that point in time. And in the RFP evaluation meeting, they asked us how many we had. And we had 5 people on the team. And I was very, very brave and pushed it and said 7 because we had made 2 offers. And we won that. And so that was the third moment. And then suddenly we realized we just didn't have enough people and we needed to go and raise funding, right? And that happened. And so many micro wins together add up to a story, I guess. But many of these were moments when we realized, oh shit, this is working.
Awesome. I love the fact that you didn't lie, right? You had 7 because you'd made 2 offers, right? So those are some of the things we have to do as entrepreneurs. We have to, I don't want to alter the truth, but we have to sometimes do what we need to do in the moment. Obviously, a great story of somebody who sat next to a person on an airplane who said he had a problem with a specific type of business. And this guy said, I can do that. And I'll tell you, 3 years later, he sold a company for $250 million that started in that airline. So courage is given in that situation for sure. Now, Yamini, we've got a few minutes left. I'd like to really ask you guys, just give me maybe a minute or 2 on this. What's been the toughest part of your journey as an entrepreneur? What are the things you didn't plan for? And I know this is a big question, but if you were talking to others and said, hey, Wayne, if you're going to start a business, these are some of the tough things that lie ahead for you. Share with me, if you wouldn't mind, in our audience today, what's been the most difficult part of your journey, if you will. Yamini, that's for you.
I can start. Okay, sorry, that's for me. So I think, so overall, I think the highs are give you a lot more rush than a normal job, and the lows hit you really, really hard. And you'll have both, as like, right, and you'll have a milder version of both probably every single day. I think the hardest probably was at different points. It's been different stuff. Like hiring the first developer was the hardest because I just didn't know where to start looking. Making sure the first sales person was like not selling to me, but actually like is a good sales person was one of the toughest things. I learned sales on the go. I learned it from good people that I ended up hiring, and then number of errors reduced. So I mean, but these are all part of the journey. I think people break down. Sometimes your team goes through emotional stuff. Sometimes you go through emotional stuff. You're under a lot of pressure. Actually, the interesting thing is, even on the peak days when everything is going well, there's a lot of pressure because you suddenly just don't have enough people to deliver this, right? And suddenly that is the bottleneck, and you're like day and night doing interviews. So many things, I think, but I think having conviction probably has been the toughest thing, because you're doing large enterprise SaaS verticalized in a space which had 1,000 players before we came in, right? Literally 1,000. I remember reading a report which had 1,000, right? So that has been the toughest to hold on to and see it through. Lindsay was saying this, right? You need a lot of grit to see something through and make sure that you're focusing on what's working. And Sohaib also said this, like, as long as you're focused on the customer, not competition, not all of the other noise, you're solving a problem and the customer is seeing value, there is a path ahead. And you chip away at it, right?
Awesome. Anything in a sentence or two that you would tell someone who is thinking about starting a business or wanting to become an entrepreneur? Any advice you might dispense?
I think out of all this, just focus on your customer, right? And be very honest. Measure, like we measured DAO. That was our honest mirror type of moment, right? Every time we look at DAO. So be very close to your customer and measure one number that you think proves that your product is solving that problem.
Great. Thank you. That was great. So, Sohaib, let me ask you the same question. What's been the toughest part of your journey, and what advice could you give to others?
My journey into entrepreneurship is very unconventional. I don't come from the financial background or the engineering background. In fact, I left orthopedic surgery to start entrepreneurship. And Yamini can vouch, like I come from Pakistan, and having brown parents and going to them and saying, hey, I'm not being a doctor anymore. I'm going to leave everything. I'm going to start something which has no future and we'll see where it goes. They will tell you you're crazy and you're out of your mind and should stop doing it. So that was my hardest challenge. Like till today, my father asks me, when are you going back to being a doctor? For 3 companies. So support is very important, right? I didn't have the support early days at all, to a point where my parents didn't talk to me for like 6-8 months. But I have an amazing partner, who supported me through everything that we went through. And it just makes you a tougher person at the end of the day. And as an entrepreneur, you need to have very thick skin. And one of my favorite books is Alchemist. And I've read it like 10 times. And the takeaway from that is, if you believe in something really bad, the whole universe conspires to make this happen in your favor. Ultimately, that's a very strong mindset. Any entrepreneur out there, it's a mindset game at the end of the day. You have to win it. Like when Brian Chesky started Airbnb, it was a mindset of making people believe that, giving your home to a stranger is okay. Imagine if a Marriott executive would have started something new, they would have created another 7-star hotel. And we've seen outsiders come into industries and radically change them, whether it was Brian Chesky coming into the hotel industry, whether it's Elon Musk coming to the auto industry and completely radically changing and challenging them, whether it's Steve Jobs coming, as a humanities and arts person and completely radically changing the computer industry. You just need to be persistence, perseverance, have a thick skin, believe in yourself, and have a mindset that you're going to win this. And you surround yourself with people who challenge you and make you uncomfortable on a daily. The moment you become comfortable as an entrepreneur is the moment you will stop growing. This is not a path of roses. This is a path of a lot of difficulties, a lot of thorns on the road which will prick you. So just need to be resilient and understand that shit hits the fan every day, more so than wins happen. Like Yamini said, you need to celebrate your small wins every single day, and that's what keeps you motivated. So
awesome.
So it's a support system you surround yourself.
That's great. We hear words like persistence, grit, tenacity, right? These are the things that give you guys the capacity to walk through walls. Mike, let me shift to you on the same question here. Toughest part of your journey, and what would you share with others who are considering making the jump?
Gosh, I'm glad we didn't start at the top of the hour with this. This could go on forever, but I'd say you've got to have passion about what it is that you're trying to do. I happen to have passion directed at community banking. I think that community banking is quite possibly the best exportable type of thought process and that the United States could offer to the rest of the globe, and that's access to capital. The access to capital in the United States is better than almost any place else in the world. That comes from community banking, a way of doing business, people that care about other people, people that care about communities. You've got to embed that in yourself. You got to come to work every day with that, and you got to embed that in your employees. And you got to find employees that can take that on and feel like they're building a long-term, sustainable company. I don't think employees like to think we're coming to work someplace where we don't have a chance, we're going to get sold, we have to take outside money. Those are all kind of hurdles that you've got to get through. But I think, I get a lot of pressure all the time when I'm talking to potential outside investors if we ever decide to take any outside money. And, they're like, well, you got to find superstars. You got to find, this kind of talent and that. And it's like, I'd a lot rather hire a stray dog. I'd a lot rather take a stray dog to a dog fight than a purebred, because the purebred is going to get us butt kicked. I want people that can adopt the passion, believe in sustainability, try to build a company that will run for a number of years, and work hard and stay committed. So
awesome. Thank you for that. And of course, you've demonstrated that for sure. Lindsay, last in the group here on this question. So what's been the toughest part of your journey, and what would you tell others?
The toughest part, it always is going to come down to your own psychology management. All of you guys hit on that. It's such an important aspect of your success, is really being able to understand your own psychology and manage it in a way that's like works for you and works for your team. And I've grown up a lot in startups and in working in startups, and you get really tied up in it. Like my ego has been really tied up in this companies in the past that I've worked on, and just that does really like make the ups and downs a lot more intense and a lot more more, I think, debilitating for you, and I think like as you kind of mature, as I've matured as an entrepreneur, like really having a more honest and macro view about the company, and also my entanglement in it, like all of those kind of like lessons that you learn over time have been really important ones, and like really helped me grow as a person, and also helped us grow as a company. I think like, the ups and downs, a lot of them don't matter. It is it is a long game. Lots of people make that joke to me, as you can imagine. But it is a long game. And so you are, there are going to be some decisions that truly matter for you, but, getting too upset, on the day-to-day fluctuations does not serve you. So yeah, I think that's like probably a big one. Try not to be too tightly intertwined to the success or failure of this thing. Cause like you are, you're doing a hard thing.
It is that. And I think all of you have made it very clear. It's not for the faint of heart for sure, but it's all about having the right people, the right mindset, the right support. A lot more conversations that we could have around this. We talk about life work balance and being an entrepreneur. I'm not sure I've ever figured that out. If you guys have, please let me know. Being able to deal with, the mental health aspect of being an entrepreneur and all the challenges that we faced in this past year as it related to COVID and so forth. But let me just stop there for a minute and ask Ashley. Ashley, any questions from the audience that we want to address?
One came through. Everyone loves to ask this question as kind of the final one. Books, podcasts that you would recommend for budding entrepreneurs?
Well, Sohaib already hit us up with Alchemist, right? Anything else you want to add there, and then we'll go quickly to Lindsay.
Yeah, that's just my favorite book. But if you're talking strictly about entrepreneurs, then High Output Management is a good book to read. This is a New York Times bestseller. No Rules. Netflix is a good book to read. I don't know if I'm planning this out. And then there's a third one on my list for this month. How Any Startup Can Achieve Explosive Customer Growth. This is another good book to read if you're in the entrepreneurship space. I typically don't read just business books. I'm a big history nerd, but if you're going after just business books, those are three good ones.
I'm always impressed with all of you and your capacity to read 3 books at a time. I'm happy to get through one on the nightstand, right? Lindsay, how about you? Podcasts, things to read, anything that's on that?
For a book I recently read, Creativity Inc. Check it out. I think that was a really valuable one. A lot of great stuff in there. Actually just listened to a podcast I really enjoyed. It's a specific podcast. So Tim Ferriss podcast, Don't Judge Me. Yuval Harari's episode. It has like this part about paying attention. That whole episode was really great, and I would recommend it.
Awesome. Thanks. Yamini, how about you?
So I've recently started reading a bunch of nonfiction, and some of the things that I really loved, probably not much to do dramatically with startups, but Psychology of Money was good fun for the examples and anecdotes it shared on how serendipity, taking bets matter, etc. And there was one more, Alchemist. It's actually for marketeers, but it was written by a marketeer. Rory Sutherland of Ogilvy and Mather, right? But it's a beautifully written book, 2-page stories and so many examples that take the whole predictably rational, but so much further, free economics, but so much deeper. So those were really fun. But I would say actually this is the thing, right? You don't have to keep reading to learn all the time. I guess you're usually like a sponge if you're most people, in fact, and you will pick up. I love reading space opera, science fiction, fantasy, etc., because it takes you to a different world. Read Asimov. It talks about humans going and terraforming planets, etc. Now, if you think of that as the future, neither Rails nor Long Game nor Vymo will matter. Right, so take it a bit easy. It's not that you're going to break the world, right, in a bad way. So just make sure that you enjoy the present. And actually, reading biographies helps me get a different perspective. Reading some of these stories helps me with a different perspective. On Netflix, for example, Chef's Table is a very different perspective. How people spend 20 years to make a carrot taste better, right? And that's passion, and you'll succeed if you spend 20 years trying to make something better. You'll really succeed. There's no way you can fail, right?
You bet. And it's interesting. I love that idea of sort of transporting to another place when we're so engrossed in what we do every day and so fully committed, right? To get into a little science fiction and find out about how somebody takes 20 years to make a carrot. But I love that, and I think it's important. I think it's mentally important too. I think it's to again transport to different space. Mike, I'll finish up with you.
Sure. Yeah. So I've got three. The first two are one kind of follows the other. The thing that's interesting about them is they're very relevant to all the current technology transformation and that. But while they're essentially business books, they're written as a novel, which makes the read very enjoyable because you get very embedded with characters that are in this thing that you can relate to. And the two books names, the first one is called The Phoenix Project, and the other one, the follow-up that actually just came out, is called the Unicorn Project. Great read. You'll learn a lot. You get a lot of perspective. But my favorite of quite frankly, the all time is very relevant, and particularly relevant as you're talking about banks. It is talking though about technology transformation. It's a book written by Thomas Friedman, and it's called Thank You for Being Late. So it's like it gives you confidence to not be afraid to go challenge the new. It makes you thankful for the people that didn't believe in it and didn't go through it themselves, and yet you brought it to them. It's a pretty challenging, enlightening, heartening book to read.
Awesome. Thank you. Well, guys, we're about out of time. Sohaib, Yamini, and Lindsay and Mike, I can't thank you all enough for sharing your journey, your transparency, your emotion, your passion, your extraordinary participation in the program. I know each of you are crushing it, and I'm getting great feedback from our team here. And thank you for your attention to FIS and the support that you're giving to this program. And I'm grateful for you being a part of that, and also that you're gaining benefit from it as well, because at the end of the day, we want everybody to win who goes through these programs. We continue to wish you great success and everything we can do to be helpful to you and our community here in Little Rock and around the world who support our programs, and anything we can do, obviously, to continue to help you on your trajectory towards great things. We're grateful to you all again. Thank you. Ashley, once again, thank you for a great program. Let me just close by once again thanking FIS, the State of Arkansas, the Little Rock Regional Chamber, Frost Accounting, Simmons Bank, and of course, Wright Lindsay Jennings for their support and sponsorship. And we look forward to seeing you at another Lunch and Learn or around Little Rock. We're going to get you guys here soon enough as well. So thanks again. Ashley, any other closing comments you want to make?
That's it. Thanks so much, everybody. Have a great weekend.
Enjoy your weekend. Thanks so much. Great job.
Thank you, guys. Nice to meet you all.
Thank
you so much.